Morning.
Good morning. Good to be spending time with you. Nice to see you again, Phiwokuhle. I'm going to start with you, if you don't mind, Phiwo. We're talking about the increase in digital lending. How has that been reshaping the increase in digital lending versus traditional lending? How has it affected the landscape?
So,
You can hold that mic nice and close to your mouth. There you go.
okay. So thanks for that. In terms of so if you look at the lending landscape as a whole, traditionally it has always been seen, or the presence has always been more around the brick and mortar space. So looking at your branch channels or your physical channels. And we all know that, the processes within the space has always been prone to cumbersome, paperwork, as long as extensive loan application processes. Back in the days, you would have a lending application that takes anything between 3 to 5, working days for that application to actually be approved. And that 3 to 5, working days was more around your simple lending applications. And by simple lending applications, it's looking at your unsecured lending. And then when you start bringing in the dynamics around the secured lending, space, it brings more complexities into the process. And so the emergence of the digital platforms has created alternatives for the industry to be able to leverage its technology stack to actually streamline the processes with the use of, the advancements in technologies. A lot of speakers spoke around, data and analytics. They've spoken around machine learning, just to name a few. And so these, the capabilities that has brought in the shifts within the digital lending space that has improved the customer experience, that has streamlined the processes across. And but by all means, we're not saying that the physical presence should be eliminated, but what we're saying is this has brought in the opportunity as well for the physical channels to be able to tap in and leverage onto these technologies in order for them to also be able to better serve the customers.
Yeah, Charlie, what are some of the key changes that you're seeing if we look at traditional versus digital lending? What are some of those key changes that are emerging?
So for us in the range of customers and banks that we help, some of our greatest story, I have a great story from Allied Irish Bank in Ireland. That's a bank that's gone all in on an nCino digital lending capability. So it integrates all of the front office with the middle office and straight through to fulfillment. It's a great example of customers for us. But since they rolled out that capability, they've actually gone for, it's kind of fun to watch. You watch their market share sort of dip over a number of years, and then they turn nCino on with a journey where they can go from branch-based complex underwriting journeys for relatively simple products. And that used to take them sort of 6 or 8 weeks to get money into customers' hands. And just by saying yes instantly, and then having money in customers' accounts through signature processes, all of that stuff in 15, 20 minutes, you watch their market share bounce instantly. And in a nation of 2 or 3 banks, you can watch a market share go from 38 to 48 to 58 over 3 to 6 months. That's really dramatic for banks. So those and just the customer confidence derived from that, total game changer.
Yeah, we're looking at Absa, and there's always traditional lending. I could think the first time I needed to lend a substantial amount of money, it was from your very bank. but how are you making that change? And what do you feel are the customers' expectations? We're living in a digital world versus the way things were. I mean, what realistically are customers expecting versus what you can actually offer them?
So customers are definitely expecting speed. So we need to be able to respond quicker. And also speed in terms of, the channels in which we're making these products available for customers. Customers are not going to wait for a branch to open. If they feel there's a need for this particular product at this point in time, they need to be able to actually, get that. And also it's that customer experience, element or factor into that as well. So they want the ease of access. So meaning that the solutions or the products rather should be available, to the customers 24/7. And if you look at the digital platforms, it allows them to get that accessibility, that flexibility and the speed that they need, because they're not going to wait for you to take 3 days, to make your decision from a scoring perspective of whether this is, the risk appetite is great or not. So, I would say the speed, access to, to finance or access to the product.
Yeah, and you've sort of hit the ground running in that you don't have that legacy. You're coming straight in at this point. So how are you acting differently to a more traditional bank that's made the change and you coming in from that place? Charlie, I mean, for you, yeah, I mean.
Okay. So for us, it's mostly about how our customers are the banks, and so we have to come in with a new way of thinking to all of our banks and get them onto that journey of how do you get data in a platform, lay down new processes that allow you to be this new expectation to customers. So the question is actually a little tricky there for us because we help our customers are the banks. Yeah. Does that make sense?
Yes.
Yeah. Okay.
So let me go back. Let me stay with you for a moment. We had the conversation around AI and machine learning. How can that be leveraged when it comes to lending?
Yeah. So, I mean, you heard from Anthony some of the things nCino is doing in that space. So for us, it's really about helping bankers focus on the right things and be more efficient. So sometimes that's interacting with, if you've got a credit policy and you've got a customer with a scenario, how can I meet credit policy and have less exceptions that require approvals? So that's one of the examples that we work on. Other ways, it's fast tracking things in complex lending processes for us. If you can, from all this data we collect, if you've then got to have a person sit there and spend 4 hours writing a narrative for a credit committee, it's okay, we've made improvement, we've got better data, but what if we can use AI to give us a credit narrative that you can give to a credit committee? And so then they're only looking at, okay, what do I need to do different to really make the case for this? So those are some of the examples. For us, it's also about, predicting forward financials. So if I can source a company's accounts and I can source management accounts, how can I play forward all of the a forward-looking view of that and stress test a forward-looking view rather than a backward-looking view?
Phiwo, what's happening in the area of AI and machine learning? I mean, if I'm going to an ATM or on my phone, it's suggesting I have this amount of credit available or I can have this amount of overdraft. And I'm wondering, where did they get that number from exactly? I mean, where's that data being collected in terms of AI? Is that also being used here in the same system, in the same process to somehow make more money available to me, and how accurate is that?
Sure. So from a banking space, we do also leverage of the AI capabilities, especially from a scoring perspective. So those help us in terms of being able to assess and predict based on customer, transactional behaviors, as well as to see how the customers have actually been transacting or using, their accounts. And based on that, we are able to then predict how much a customer could possibly qualify for. If it's an existing product, we're able to also predict, how much limit or an additional limit can a customer qualify for, and we're able to basically provide those personalized offers to the customer based on their affordability, of course.
And if you want to add to that, Charlie.
No, I as a customer of a bank that is particularly strong in that, it just makes it really easy to do business with them when they're saying, you can have this, you're pre-approved, let's go.
Yeah.
So I'm a big fan of this. I think it's if you want to work on how to expand your wallet share with a customer and stop them having to even think about your competitors, and not have to fill in more forms and all those things, this is the way forward.
Yeah, I mean, speaking about competition, how can you be competitive in this space? I mean, you almost want to say we don't want to outgive the other institution, but how's competition driven around digital lending?
At nCino, that is for all of our customers. How do I get a decision to a customer that says, yeah, if you say yes to a customer, they're invested in you. So that say yes as soon as you can, with whatever ways you can speed that up. And then how quickly you can get cash in somebody's account if it's, cash is the thing. But time to yes and time to cash are the sort of crucial things. I think what we're starting to see a real shift towards right now is how I can make doing business with a bank easy. So, if you've got a complex commercial lending product, how do I make the covenant testing associated with that easy? So I'm sourcing data on accounts, so I don't have to ask you for your accounts every quarter, and then all the things associated with that. Which is a double bubble, right?
Yeah.
It's easier for the customer and it's less work for the bank if you can automate all of the processing of that. And then the last thing I'd say is, in the UK, as an example, in mortgage lending, where our mortgages get renewed every 2 or 5 years, working on customer retention strategies for banks so they don't have to go back to market, go back to their broker, go back to those customer retention things. So it's just easy to renew the product, is a real big focus for banks right now.
I'd like to come to you, Phiwo, around that concept of competition and how the lending experience can drive favor as opposed to another brand.
So I'll definitely say, and to your point, it's around, again, the speed, the ease of access, but also the ability to be able to personalize the customer journeys for the customers, as well as to personalize the product offering that you are actually offering to the customer. So, for example, within the lending space, when a customer comes into any of the channels, you've already pre-assessed that customer, so you already know what that customer could potentially qualify for, and you know that this is a good customer. So you're able to ring-fence those customers that that you'll potentially, make a sale. So if a customer, for example, comes into your channels and they are applying for, for example, that you've already pre-qualified them, let's say for 100,000, and they coming into the channel and they are applying for that. So you already knocking off a few of the, the decision and the scoring mechanisms that you need to apply. So you then tailor make your customer journeys to fit for that specific customer. And if a customer comes in and they are not pre-qualified, you again take that customer into a specific journey that is customed for that specific scenario.
This is a very customer or consumer-based question here, but in the area of lending, how much responsibility do you feel an institution has around educating a consumer, a customer, on credit and lending? Because just because the 100,000 is available doesn't necessarily mean you have to launch yourself towards it, which I guess at the end of the day is what you want. but where do you feel education sits in terms of what that'll cost you, the interest, etc.?
Sure. So again, going back to the customer experience. So one of the things that we have actually built into our journeys is to say to the customer, so it's how you actually communicate that to the customer. So for example, you don't tell the customer and say, I've qualified you for 100,000 and therefore you can take the 100,000. But it's how you actually frame it that you could. So meaning that there is, other criterias that could also come into play that could also affect that. And also within your journeys, we're able to actually, take the customer through the process to be able to show to them that if you take the whole 100K, for example, this is what it means to you. So this is how much interest you will be able, we're going to be charging you. This is how much you're going to be paying on a particular month. Should you wish to reduce the offer, this is what it means, to you as a customer. This is how much you're going to pay. So those things or those factors, it's things that we've actually built into the journeys for the customer to be aware upfront before they make that decision.
Do you want to add to that? I saw you nodding in agreement there.
Yeah, look, I love this. We've actually in the UK over the last year enshrined in law something called the Consumer Duty Regulations, which is an obligation on banks with all products, but obviously particularly relevant to lending products, to make sure that you're doing the right thing by the customer. It's an obligation on the bank, all lenders of all forms, to do the right thing by the customer. And it's kind of as simple at that level. So it's quite profound now, and banks will get called out by regulators and pay fines if they don't, if they engage in any kind of shady acts now. So yeah.
I'm going to stay with you for a moment longer, Charlie. Chat around embedded lending solutions and how this is altering the borrowing experience.
Yeah, so embedded lending, it's quite interesting. It's gone through a few twists and turns. I think the most common place we see it now is in the Amazons of the world and large equipment, significant purchases. I think the key there is who has the best relationship to make a real credit decision for a customer. And I think it's really watching a buy now pay later presentation just before this. We've been on a real journey with that too, as a sort of an alternative, and that's had a tough journey in my experience over the last little while. So it's really coming back to who's the right person to make a lending decision for a person who's engaging in a purchase that needs that kind of support.
Yeah, Phiwo, there's an implication in this instance with the embedded solution for both the borrower and the lender. I don't know if you want to talk around that for us.
I think from a banking sector, right? It brings that collaboration that we've been referring to or talking about since yesterday. So I would definitely say that it brings that collaboration between the two parties. So the bank and the non-banking industry. So for example, let's take a customer that is transacting on an e-commerce website. So customers making a purchase on Takealot. They have an option to be able to settle for that purchase at that point, or they can be presented with an option to actually pay later. And that requires that collaboration between the banking industry and the non-banking industry, because in the instance of a Takealot, Takealot already has that, that customer, and you still want to provide the customer with the flexibility of, settling and concluding with that purchase without having to leave the environment or the platform that they're currently transacting on. So being able to bring in that embedded, product offering simplifies the journey from a customer perspective, and it's a gain from a banking industry as well as the non-banking industry as well, and as well as the actual customer.
Yeah, that brings us back to the risk associated with these things. And I mentioned paranoia and the way that we feel, because you're on one place where it's embedded, and then suddenly you're waiting for your OTP, but this one didn't give you one. What's happening? And then this insecurity that steps in. So it brings us back to fraud, trust, I guess, awareness of what's going on. So I'm going to stick with you for a moment longer, Phiwo. Talk about the challenges and the risks in the space of digital lending and also embedded lending.
It is certainly fraud. Yes, we are able to, be flexible, provide customers with, with the choices that that they need in order to enhance their journeys, to enhance the customer experience. But unfortunately, all of these processes are actually prone to fraud. There's a lot of fraudsters that can come in and impersonate a customer. It has happened a lot within the digital platforms. And I guess it goes back to, to the points that have been raised around customer awareness, making sure that the customer is aware that they should actually be protecting also the credentials that they are using when they are accessing the digital platforms. And just to also be always cognizant of the fact that, they don't always have to, promptly respond when these impersonators call them, because that's one of the things when they call you, they actually bring in that sense of, urgency, because somebody can call you and say, I can see a certain transaction is about to go off. So they create that urgency. So before you actually respond to that, one of the things that we always tell the customer is just take a moment, pause, and go back to your banker and be able to go and verify that experience. Yeah.
Yeah, Charlie, I mean, you've got people who just don't have an appetite for risk and so are overly careful in terms of digital lending. And then I get a feeling, and I'm happy to be proved wrong here, but this feeling that we'll just click and go, it's fine. Everything that's created, and I'm seeing a little picture of a lock there in the corner, everything is fine, let's just go for it. And I think that often leads people also down a rabbit hole. So are we too casual about it, or do we have an appetite for risk? Are we too careful? I mean, what is the information, what's data telling you?
I think what we see is people want to be able to engage with their banks digitally anywhere. For us in a relationship banking world, often with small business is the heart of many economies, right? You want your relationship bankers to be able to come out of meetings, have meetings as a starting point, and to be able to use the channels to their advantage, but also have a relationship. And so for me, it's about being able to have the best of both worlds. And I may not want to, I may want to start a journey in one place, but to your point, like I may be uncomfortable with a particular piece of data that I need to provide, or a set of accounts, or something in a process, and I want to be able to initiate that and get to that point and not have to start again, or phone a call center and the person has no idea what I'm talking about. So for us, it's very much about how do you create a platform where a customer can interact over any channel, start here, stop there, pick up with a person, or go back to digital, what they want, when they want, the way they want it. And with that, you can kind of get through most of those challenges, I find.
Yeah, just to add on that, and to what you've just touched on, Charlie, around the relationships with the customers. So if you look at our digital strategy, we're saying to the customer, we want everything to be done in digital first. And what we have identified was, especially when COVID started, right? A lot of customers were very really what's the word?
Reluctant.
Reluctant, thank you, to come into the digital platforms because of safety issues. So some were not comfortable because they thought that they could not trust, the digital platforms because there isn't that human, element. And to bridge that gap, one of the things that we have done as an organization is to go back to the customers and introduce what we call a digital fraud warranty. And that's what we actually selling to the customers to say, if any fraudulent activity happens due, to the customer transacting on our digital platforms, we're able to actually investigate and reimburse the customer, provided that they follow, the right procedures that we actually tell them. So, for example, they need to make sure that they continuously update their mobile app. They must make sure that they are transacting on the latest, version of the app and keep their credentials on themselves.
Yeah, that's all from my side. I'm not sure if there's any questions here in the audience. I see a hand going up in the back. I see another hand, so I'm just going to stand quickly over here. If you don't mind, Vanessa, or whoever's got the mic, Ariel is over there. Thank you. If you don't mind introducing yourself as well.
Hi, my name is Mlotshwa. I just want to ask a question regarding mortgage lending. I think when we look at mortgage lending, there's still high cost that consumers pays, especially in the acquisition of their bonds. And if there's any lawyers here, which I don't have money for lawsuits, but I believe that lawyers are the people that are getting more money in that transaction. And we feel that it's more paper-based, which can be easily automated through digital transformation. Is there anything that banks are doing to help customers to reduce the cost of transfers? I mean, there's simple thing like change of ownership that you pay a lot of money, but it's just simple to change the ownership. That is a paper-based exercise. Secondly is around the time that you need to wait for your property to be transferred. I mean, if we can digitalize that, I mean, it will be easier for investor to quickly get their money than waiting for 3 months for transferring properties. So is there anything that banks are doing to help us in that? Thanks.
So thanks for that question. So what you're touching on is around the actual, ecosystem from a secured lending perspective. And as the banks, we are continuously engaging with all the stakeholders, that are involved in the ecosystem. And there has been, great strides that have been made in terms of streamlining those processes. And unfortunately, those are outside of the actual, banking space. But we have, been in discussions and in consultations with all those stakeholders. We have, well, probably not to the point where customers are actually expecting, the fees to be dropped. But if you look at the pricing around, the fees from the conveyancers, those have been significantly dropped. So as the banks, we are able and we're trying to engage with those stakeholders in order for us, the banks as well, that we don't lose out for that on that sale. So we are continuously engaging with them and to see how we can actually reduce that actual cost to the customer.
Do you want to add to that, Charlie?
Look, I don't know the South African mortgage market, so I'll just say that it's a tough problem to solve because there are so many stakeholders that sit outside of the banking domain. But I do see fragments of progress on all of those fronts. Digital land registry interaction, the the actual money movement process changing significantly. For us, giving a place where all the actors can interact in a fulfillment process, conveyancers, lawyers, valuation agencies, all those kind of things. So there's lots of bits of work to make that move forward. But I think it's going to take something a little different to actually really move that initiative forward.
We had a question on this side.
So my question is, what are the bank's sentiments in implementing disruptive AI while avoiding PR? And also, clients perceiving the value of AI from an ROI perspective? Yeah.
Do you want to take that first, or do you want?
You can go first.
Yeah.
Okay,
Okay.
thank you.
Okay, so I would say everybody is interested in how it can help their business, serve their customers better, and that usually means elimination of manual tasks that allow them to spend more time on their customers. That's not strictly, I mean, that's not an AI thing, right? That's just what every bank is trying to do. So I have a great story from a bank where they're literally arguing at the exco level about how they're going to redeploy their resources that they freed up from just digital transformation, let alone AI. But I think how do you take that to the next level, give real insights, see through what's important in all this data? We've got all this data and all this perspective from customers. How do you see through that? How do you make the interaction with the customer easier? So if a guy or girl walks out of a relationship meeting and says, can just literally interact with the bank's customer systems and loan origination systems in natural language and launch opportunities that go and, almost before they're back at head office, go and ask the customer, hey, for this thing to happen, I'm going to need that. Those kind of things. What are they wrestling with? I think one of the banks have large volumes of people, really smart people who come up with their own AI strategies. And then you've got vendors like us who come with AI strategies. And I think they're really wrestling with how does this all hang together? It often comes from a technology point of view. And I've got multiple layers of technology. And how do I optimize that? So it's complicated. And then I think the data piece is, where's the data? And so we've focused really hard on making sure that a customer's data stays in their environment, but we can process that through our AI solutions, so the customer doesn't have to say, "Oh, I'm giving my data over to this other party." And so that and the privacy of all of that is really important.
Thanks, Charlie. We have time for one more if there is. I'm just going to stand up so I can see over there. No more questions. So you're welcome to connect during the lunch break. A big thanks to Charlie Mclver. Thank you so much. And also to Phiwokuhle. What a pleasure.